Think this better. Let me join this. Hello. All right. I think it was network issues. The YouTube has been misbehaving since yesterday. Once I log in within a short period of time, it will log out. I don't know. All right. Sorry for time wasted. Sorry for the time wasted. So if you can hear me, write it in the comment section. If you can hear me, write it in the comment section. What's this? If you can hear me, put it in the comment section. Okay. Is it only one person that is there? What's this? Ah, it's like it's only one person that is here. Okay. So were you able to, Mr. Amos, were you able to do anything for this week? Because I didn't see any question from anybody. So I just assume things are going on fine. Were you able to do any trade? Were you able to take any trade? I know so many people are always looking for magic in trading. Trading is very simple. But some people will expect maybe it's one big thing that is making people to make money. structure. Okay. So, Mr. Amos, then who is there? Richard, are you there? Okay, let me just continue then. So today I want to move into trends. The last time we talked about Fibonacci, talk about trend line, talk about indicators. Please let's make it interactive. If it's TikTok now, I can actually bring you up, we'll talk. But this YouTube, I've been trying to see if that option is there when people can be talking, but I didn't see it. So the only thing that can work is the comment section. So we have to be interacting with the comment section, right? So let's put in the comment section if any question based on what we did last time. Then you can still mention the last thing we talked about, those things that we talked about. And if you practice any, put in the comment section what you practice, how it worked. And like I said, before this class started, I mentioned it. If night is not convenient, let us decide on the time. I made it open. But no, I don't know. And nobody is typing and nobody is commenting. Or can you hear me? Is anybody hearing me? If you are hearing me, please just put in the comment section. Just type yes. If you can hear me, type yes. Yes on the comment section. Okay. So, like I said, last class, can you still remember what we discussed? Can you mention things that we discussed that I can still remember? Okay, or if nobody's typing, let me just continue. So, today I want to talk about expansion and retracement. Expansion and retracement. Basically, expansion has to do with trend. Let me. All right. Okay. So I continue from there. Okay. Now, the ability to combine all these things together to take trades is what the advanced stack class is all about. So, the ability to execute trades, what these things you've learned based on how you can combine one and take trades. That's just the master class is all about. And also to mention some terms that you may know or you need to know. All right. So, like I said, expansion, I will start with expansion and retracement. Expansion has to do with trends, and we always have two trends in the market: uptrend or downtrend. Uptrend, downtrend. Basically, there are three markets phases: uptrend, downtrend, and consolidation. So, picking the two of them now, the expansion part, which is uptrend and downtrend. Uptrend simply means when price is creating, let me use, is it here? Okay, parts, yeah, let me pick this. Now, uptrend simply means price creating a new high and respecting previous low. Price creating new high, respecting previous low. Just like this now. Price moving up, right? But it won't just move up in a straight line. It will definitely be moving in waves, right? So when price is moving up, it creates this high, move down, now create this low. This was the previous low and this another low. This low now is called higher low. It's respecting this low, right? So when price is respecting previous low and creating a new high, create a new high, respect previous low. That is, it doesn't break through the previous low, then we'll call it uptrend, right? Let's see if you can see it in a real market scenario. Let me try to, let me stop sharing this and share a window. Also, actually, no, cancel. Okay, let me share this a window. Share. Cool. Now, okay, let us pick this. We are picking from this region down here. Let me map it out. Okay, now within this two red line that I put here, right? Here now we can see uptrend here. Price moved up, creates this low, but this low up is showing. Okay, now this low is not lower than, it's not up to this, right? The market moved here, market moved and creates a new high here, right? Now move back. This is the previous low, right? The price didn't break. Let me even use this. This is a low here. This another one. When price got here, price didn't break below this, right? Then it push high, create a new high, create a new low, and the low is stay above this, right? So when price is creating a new high, respecting previous lows, we call it uptrend. When price is creating a new high, respecting previous lows, we call it uptrend. Some will tell you when price is creating higher highs and higher lows, we call it uptrend, right? While the downtrend is when price, I can see both opportunities showing here. So let me just use here now for downtrend. So downtrend is when price is respecting previous high, breaking through, creating new low. Price respecting previous high, creating a new low. Then you call it a downtrend. Price this when price moves from here down here, price pull back, create this, move down. This was the previous low, price creating a new low. Move up, this is a previous high, this is a previous high, this is another high. Price didn't break this high, it's respecting it. That's downtrend. You can see price moved back here, respecting previous high, creating a new low, respecting previous high, creating a new low. In such situation, you call it downtrend. Or you say when price is creating lower lows and lower highs. When price is creating lower lows and lower highs, you call it downtrend. Okay, so that is expansion phase in trading. We call it expansion. Price moving in one direction. Okay. Now retracement is when price. Now here, what price did here is called retracement. That is when price is trying to respect the previous high. We call it retracement. When it is downtrend, when price is respecting the previous high, we call it retracement. So this a retracement on this trend. Price is going down, but there is a little price moving back up. That's retracement. Here also is a retracement. Price is moving down and price tends to move back up a bit before creating a new low. We call it retracement. Same thing applicable when it is going up. Price going up, come back, respecting previous low, move up again, respecting previous low, move up, respecting previous low, moved up, respecting previous low. When price is doing this, you call it a uptrend or you call it retracement. Sorry, you call it retracement. A movement against the trend, movement of price against the trend, we call it a retracement. Retracement is the movement of price against the trend. All right. So that's to expansion and retracement. And it's on this expansion that Fibonacci retracement is needed. Now, just the name implies Fibo retracement. That means it is used to calculate retracements, how price can move, where price should get to, if price is trending up, where price should get to and continue moving up, where price should get to and continue moving down. So that's what Fibo retracement is used to calculate. So now depending on what is happening, sometimes it may be 50% retracement, sometimes it will be 35% retracement, sometimes it will be 75% retracement. Some will use 61.2, 61.8 retracement. Now depending on the number. So let me pick Fibonacci now. I put it, this is the impulse move, right? Okay, let me turn it. So it's on the impulse that you put your 0 to 100 if you want to use Fibonacci. You can see there is here now you can see number from zero point 0 down to 100. So that's the movement, that's the major movement. You can see now from here down to this place is the major movement. Now this is the retracement. Okay, I didn't edit this Fibonacci. I didn't do the editing, but let me edit it. me edit it so that it will work the way it should work. Levels. No. Okay. System one. Let me still add some faces 121.21 and so on and so forth. How to add 75 retracements. Okay, basically these the basic Fibonacci, right? You can add numbers to it. Some people added 71.2, 75. Some people are using percentage from 0 to 25, 25 to 50, 50 to 75, 75 to 100. So depending on the calculation, but I do use this basic one. I do use it to do the calculation. All right. So from 0 to 100 is always the movement of the price, the impulsive movement. All right. So this is the retracement. Now price retraced on 61.8. Right. Price got to 61.8 and pushed back up. And when price moved up here, you can see this one is on 38.2 and price continue moving up. So it is used to do the calculation. Then before at this point in time now, at this point, there are some other things you will see to confirm this entry. That's how to take entries. You do one or two calculations. There should be combination of two to three analysis. Call it confluences before you take trade. So this is Fibonacci retracement. On this now, those using gap, we have gap here. Those using other block, we have it here. And if you should go to lower time frame, this is H4. If you go to lower time frame, at this point, at this point now, you will see SMC analysis here. You see SMC analysis here on lower time frame, and you can see break of structure and retracement. So by the time you see two, three things combined together and it's giving entry, that's what will give you confirmation to take trades. Okay, and that's why I'm trying to combine them together now for us to get the understanding. Just give me some minutes. So, like I said, combine market structure. Personally, I love combining a market structure with it. On lower time frame, if you check here, you will see market structure here. A mid price, the price that gives this confirmation for sell. I mean for buy, sorry, for buy. So combining these one or two things together to make things work is what trading all entails, and that's what you just need to practice. And everything has to do with practicing. Okay. Later, I'll talk about indicators. I'll talk about indicators and how you can combine them together and make things work. Like I said, that there's no analysis you want to do that doesn't work or that you've heard of that doesn't work. You just have to understand when it will work, how it works, and that's it. So I've talked about expansion and retracement and the calculation of retracement. So to know when it will do 61.8, to know when it will do 50, it will do 38.2 retracement. All depends on other things that will confirm it at that point in time. Like this 38.2 now, you can see it's because of this gap here that made it to work. All right. So and so on and so forth. And so on and so forth. So let's move forward. Okay, so when you talk about a break of market structure, break of structure now depends on the structure you want or you are talking about. But literally, structure always occur when price is consolidating, when there is a ranging in market. That is when a structure always occur. And those people that have been following me, anytime I'm picking shapes, I always call it price is ranging. I'm waiting for breakout. Then from the breakout, we'll know the next thing to do. So when price is creating structure, that's when price is ranging. It's trying to create momentum for an impulsive move. So when price is out of that structure, when price is out of that consolidation, when price is out of that range, then you call it a break of market structure. That is when price is creating a new high or is creating a new low. Then you call it break in market structure. Some would say it is a swing high, swing low. When price break above a swing high or when price is breaking below a swing low, call it market structure. And swing high and swing low is always between three candles, right? When you have three candles, let me pick this. These are three candles here, right? Price shoots above, the middle one is shooting above them. That is closing above the previous one. This is a swing high. This is a swing low. It didn't break the structure. This is a swing low. This is a swing high. This is a swing high. This is a swing high, and so on and so forth. This is a swing high. Just like uh, when you say something is swinging, move and come back in between the range, and you call it a swing. So when body candle is closing like this, okay, this is a good break of structure. Like I can say this candle is a full body candle that close above this level, right? So we call it break of structure. The same thing applicable here. This Okay, let me put this way. We have this here. We have this here and price break above it, right? Full body candle. That's when you talk about the break of structure. But if price now refused to close with a full body candle, then you talk about swing. I'm trying to pick a good scenario of that. Just like all these ones, okay, these are swing, these are swing. You can see this candle didn't close above this, it's still within. You can see this one did not close below this, still within. You just create a new low. This one creates a new high, but failed to close. Create a new high, failed to close. Created a new low, failed to close. Right. So talk about the break of structure. So like I said, break of structure occurs when the price closes above or below a swing high or swing low. It's as simple as that. You must know when price is moving in direction, you must know the direction. That's why we talk about trend in the first place. When price is moving in one direction, you have to know that. Then you have to know when it's not swinging. That was when price is failing to close above previous low or below previous, and to close above previous high or to close below previous low, right? So when price is breaking out like that, you wait for retracement, right? Once this is happening, the next thing is for price to retrace. That's how price should do. After a swing low or a swing high, price should retrace. There should be retracement before anything can happen again. Maybe before there will be break of structure or any other thing, there will be retracement. There will be retracement. Once price swing, next thing is for price to retrace. These are basic way price should move. And that's why anytime I'm doing analysis, I always mention that these are the things that price should do. This is how price should move. If all things being equal, that sometimes that price will change, things will change, right? That's I always say it that okay, you have to wait. Once this is happening, this is what should happen. At that point in time, you now use one or two things to combine your entry to know if you will take the trade or not. Okay. Sorry, I have to digress now. Talk about this trade we are seeing on this chart. Now we'll talk about management of trade, right? This this is the number of pips. These two, three, now two, two, three is the number of points. So we are taking the first two to be the number of pips. So here now I have 25 pips, right? Now 24 pips. It was on 40 pips. I saw it on 40 pips. When price has moved in your direction for 40, 50 pips, it's basically ideal for you to break even. That is, you move stop loss. You move your stop loss to the entry. Let me go to lower time frame. It's ideal you move your stop loss to the entry because the basic thing is for you to make money out of the market. It's not to be a prophet or to say, oh wow, I said this and it happened. No, it's for you to do, it's for you to make money. So once, and also for you to protect your money, you must know that you need to protect your money, which is also very, very important. So once you take a trade and it has moved 40 pips in your direction, it's basically advisable you just break even. Set your stop loss a bit above your entry so that if price should go against you, you will not lose money. At that point in time, you just have to evaluate your trades and see if you have to take trades again. So when price moved in my favor of 40 pips here, How to break even. I entered this trade since it entered. I was not managing it anyways. I wasn't managing this. So it has entered profit twice and I didn't close it. Now if this now should blow this account, it will lead to regret. So that's where management is very, very important. Once price has moved in your favor for 40 pips, at least 40 pips on gold currently now, or any volatile pair, once price has moved in your favor for 40 pips, it's advisable you break even. If price should retrace and hit you out on break even, you won't lose money. Your capital will still be protected. All you just have to do is to wait, do the analysis again, and see when you can take another entry, right? So now look at another entry for this now. Had it been I break even since, this is where I want to take this trade again. This one will hit break even and then enter this trade again here. At this point in time now, I'll be in a good profit also. Currently, if I should take enter this trade from this zone, this is 59 pips. This is 59 pips. At this point in time also, I will break even, waiting for price to continue moving or I close. Like 40 pips, 50 pips is a big movement for so many traders. Some people are even it's just 20 pips. Once price move 20 pips in some people's favor, they are closed because they will enter plenty position, use a very big lot size, and they will come out and be saying it. People will not look at the number of pips; they will just look at the amounts the person has made. And in such situations, so many people are also doing accounts because you'll be risking so high. Okay, so it's advisable to manage trades once you are trading. It's very, very important. And ensure you are setting your stop loss. Set your stop loss, set your TP, and manage your trade. Don't just enter trade and leave it. Because some trades they are very, very funny. It may be close to your TP. I know that will still happen and I will show it. It will be close to your TP. Just let's assume okay, if someone enter trades from here. If someone has entered trade from here, your TP will be definitely your TP will be above this, or you want to manage your trade and put your TP here. Now, if your TP is here, see how close price is to the TP. Now, price did not hit the TP, now went back again to your entry and even became negative. At this point in time, except it's not your money and you're just using the money anyhow. But if actually it's your sweat, it's money that you know, okay, if anything should happen to this money, something will happen to me. You won't leave it. Price will not move in your favor for 80 pips, 100 pips, and you will leave it. You won't. No normal human being will do that. It's over 100 pips. So that's to that. Management of trade is very, very important once you enter your trade. If it's in your favor of 40 pips for gold or high volatile currency pairs, or for the low ones, maybe it is on 20, 30 pips, break even and let price run. If it hits your break even, just do your analysis again. Like I always say, there are opportunities in the market every blessed day. There's no day, there's no point in time that there is no opportunity on the trade. Opportunities are there and it will be there for life. All you just have to do is maintain and organize yourself and take trades. Right. So I go back to what we were discussing, the break of market structure. Okay. Like I said, break of market structure when price is closing above swing high or below swing low. Call it break of structure. Just okay, like this zone now. Let's look at this zone. You can see here now. You can see all these ones. Price was just there's no break of structure here. No break of structure here. Here there is break of structure here. So once price break structure, the next thing you do, you wait for is just retracement. Once you pick any break of structure, or next thing you wait for is retracement. Because normally price should retrace. That's how price should do. When price is moving, it should retrace. It shouldn't continue moving like that without retracement. Can you join the trade? Oh, sorry, I wasn't looking at this. You can't see the screen. Oh, sorry. So I'm sharing the screen. So if I'm on the other screen, I wasn't seeing these charts to react to what is going on there. Okay, let me do this way. If I do this, okay, I think this will be better so that I can be seeing the charts. Oh, sorry, I didn't see um, gospel. Sorry, I didn't see this your message earlier. I don't know if you just typed it or you typed it before now. And is it only? It's like it's so it's one person I've been speaking with since. Yeah, I just opened the chat to see, but I saw four people. I saw four people here before now, and that was okay. So please click on the click on the like. So that's the problem with people not reducing price of teaching forex trading. You know, people always take it for granted, and like I said, I'm not worried about this taking it serious or not taking it serious. No. So I continue. What was I saying? So I was talking of a break of structure. So like I said, anytime there is break of structure, the next thing that price should do is to do retracement. And that's where Fibonacci, other blocks, fair value gap always come in. Okay, so once you pick break of structure, like NRD is a break of structure, the next thing is for price to retrace. So once price retrace, you will taking trade. Let's assume we enter trade from here. This is over 100 pips, which is a good movement, right? Which is a good movement. And here now, this is a break of structure here, and this is the retracement. This retracement now should be around 38 of this movement. Let's check. Okay, you can see 38.2 retracement. Now, at this point in time, now by the time you check, you will see some other confluences that actually agree with this entry. You can see this another block now. If you still check, price is now. Let me try to drag it to the back. Where is this? One, two. Okay, so like I said, if we check here, this is a reason, and this now retracement, which is 38.2. Now with these two things now together, you can see this entry here, and it's already swinging low. You can see price is creating is swinging here, and since the price swing, no candle closed below this. So this now, these two together now gave the confirmation for this entry here, and this is a good entry to trade. So once price moved, when there is break of structure, there is break of structure, price will definitely retrace. So it's that retracement you will not do analysis on. Okay, if it's retracing, this is where it should likely get to. This is where it can get to. This way it can get to for a good retracement. All right. So two things now I've talked about. Hope you are taking notes, Mr. Amos. You are taking note of all this. So I move forward. Okay, now I want to talk about failure swing. Like sometimes there will be a swing high that can fail, a swing low that can fail. Okay, when this failure in swing is happening, that's when we talk about double top, double bottom, triple top, triple bottom, like this. This a swing high. This swing high now price failed to close above this. It range and reversed. At this point in time, now this one is a failure swing, right? This one has failed. That is, price didn't close above previous swing high. And the same thing applicable if it is a swing low, like this, a swing low here, and price failed to close below it here. So this is a failed swing. It's as simple as that. When price failed to close above the previous swing low or previous swing high, they call it a failure swing. So, Mr. Amos, can you hear me? Are you still with me? Or if you are still with me, let me know. If not, let me continue. So that when I'm done with today, I'll post the link for anybody to go and watch. Right? So that's failure swing. That's failure swing. And the last time I talked about liquidity, I said liquidity is at the point where price change direction. At this point now, when price move down, it's called liquidity. This is liquidity points. This is liquidity points. This is liquidity points. At all these points when price is changing direction, we call all of them liquidity. Okay. And some people give liquidity as people love giving grammars. So liquidity is defined by stop losses. Where the stop losses exist is where there is liquidity also exists, right? Some people will believe that you where somebody will place stop loss, that's where liquidity is. That means for you to, if you enter a trade, it's either you put your stop loss at the swing low or you put it at the swing high. You put it on swing high for retracement, swing low for retracement, right? Because if price should retrace, it shouldn't get to the swing high or it shouldn't get to the swing low because it's on the retracement. Okay, so where these prices, yeah, Mr. Inka, long time. How you doing today? Please like the live. Click on the like button. It's very, very important. All right, so that's how people define liquidity. But at the end of the day, by the time you look at it, you realize that at this point now, where you are putting the stop loss now, that was the last place price got to and it changed direction. All right, I've seen it. That's where the last place price got to and changed direction. So all those points, you call them liquidity. So where stop losses have been put or where price got to and it changed direction, call it liquidity. Oh, and this is dark. Let me turn on this light. All right, so I think this is better. That's about liquidity, right? We have different types. We have buy side liquidity and sell side liquidity. Buy side liquidity, sell side liquidity. So buy, that's where you place a sell trades. Buy side liquidity is where you enter a sell trade. Sell side liquidity is where you enter a buy trade. Okay. I'm just trying to simplify everything so that I don't get confused. Okay. Like this trade now, this trade has entered. I wasn't looking at it. Let me check. This trade got to this 84. That should be like 80 pips. Okay, so it's ideal. Already on break even. You can see now this is liquidity sweep. What just happened in the market is called the liquidity sweep. So from here now, price will push down. So this, when I did that, I closed the trade because I've seen that price will definitely retrace down. That's sweep the liquidity. That's clear all the stop losses here. So for those that were selling, their stop loss will be definitely be around this place. So price has closed everything. Once this happen like this, the next thing is for price to push down. Those are ways price should just move. Literal way price should move. And I didn't see your message earlier. I didn't see your message earlier. Maybe I saw it. I would have mentioned to place the trade. I didn't see it earlier. So what is time now? Okay, almost 3 o'clock. Okay. So this now you can call it failure swing just because price has failed to close above this. And this 15 minutes time frame. Okay. This 15 minutes, this 30 minutes, this 1 hour. And this 216. Anyways, on 1 hour time frame, price may still continue to push higher because this is a retracement on this. But on 15 minutes, there is a rejection. There's a rejection. There's a rejection. Here now is just that price is ranging. So price is purely ranging. Like personally, I didn't trade since on Monday. After Monday, I didn't place any trade at all. I didn't place any trade at all. That's why the fact I do analysis like this buy trade now, you can see I'm doing analysis. Anytime I'm doing analysis, I place trade. Once I do analysis, I place trade. I do analysis every day and I place trades. Be it on a demo, if it is a demo account I'm with, I place the trade. Anyone with me at that point in time, I try to place trade. Most especially on demo account, I place trade there. Let's see how it goes. Right. So that's to uh, buy side liquidity, sell side liquidity. Liquidity sweep. What just happened is called liquidity sweep. Price close, sweep all of them, and it came back into the range. We call it a liquidity sweep. If it is a smart money concept now we call it what they call it. Yeah, it's still liquidity sweep. Yeah, they will still call it liquidity sweep. It will still call liquidity sweep. So now trading all this now you can see the way I'm saying it. and where you will place your trade. How to trade it is very, all I'm saying is, all I've been saying is how you will trade. Doing analysis and placing your trades. Doing analysis and placing your trades. Okay. You can see now, immediately this happens. Literally, the price should sell, price should move down. That's the normal way it should be. That's the normal way it should be. It should move down. Okay, so now I move forward to talk about daily previous low, weekly previous low, daily previous high, weekly previous high, monthly previous low, monthly previous high, 4 hours, H1, M15, M30. Okay, so to all this break in structure or liquidity stuffs, failure swing, double top, double bottom, triple tops, triple bottom. They're basically like this. They always occur on most, especially you can easily see them on lower time frames, 15 minutes, 30 minutes, H1. Now, if it is on H4, it definitely happens on H4, on D1, on weekly, on monthly. It happens, but it will take a longer time for it to happen on all those higher time frames. But on 15 minutes, we can easily see it. On 30 minutes, 1 hour, we can easily see them on daily basis and take trades with them. Okay. So now this is a good example now for double top, one, two, and this price sweep the liquidity. The next thing for price to move down and break structure. Price should move down and break structure. That's that this thing should happen. But this is forex market. That's why the forex market will say that anything can happen. But before anything can happen, there are basic things that is happening, and more reason why forex trading is far, far, far different from bets, from betting, or from gambling. There are particular ways that price will definitely follow. Nothing can change it. It's like that because it's an algorithm that has been written. It's just like when you slap somebody now, the normal thing is for the person to feel pains. But if you now slap somebody and the person is not laughing, that one now is another situation on its own, which doesn't occur to most people. But literally, when you slap somebody, the person should cry. Okay, so the same thing applicable to trading. There are patterns, there are ways price will follow. It has been designed to be like that. And that's why you just need to learn and understand what is actually happening. And that's why I always recommend learning. It's more preferable you learn, get the understanding, and follow suit. That's when you will enjoy trading. Don't just sit down and assume, let me buy. Just like I was discussing with someone yesterday, and I told him to join this life. I even shared. Okay, he said he's new to trading. What he's doing is just once he opens market, he will enter buy. And if price should move against him for like 20, 30 pips, he will enter sell. So it will be on the two positions until one will move. And I now asked him, okay, what if you close one and immediately you close it, the one you left now go against you at like 1,000, 2,000 pips? Your account will definitely blow. Or you leave the two of them, one now move in the direction against your position. Maybe your account balance is $80 and the price now move against you $120. Market will close it out because you can't hold, your account cannot hold a negative money that is bigger than your balance. It's impossible. So at that point in time, price will just close you out. And the losses you don't want to incur, you will incur it. So it's much more preferable you understand the market. You will definitely make the money, which is very, very sure. You will definitely make the money. But you just have to understand what the price is doing. It's what can be studied. It's what can be. It's just like if a doctor wants to perform. We have different kind of operations. Operation to deliver a child is quite different from the operation to remove cancer or removing fibroid or removing what's it called? Um, all this pain was it the one they do used to remove stool. Appen- Appendix, yeah. All of them they have different operations. The kind of operation you will do on the stomach that the person must not eat food is another operation on its own. So all these things you just have to know that okay, if I want to do this, this is what I need to do. If I want to do this, this is what I need to do. Then this can happen, then this can happen. Sometimes it can go out of the way, but it's not always. It's not always. Just like in some situation that okay, we perform operation and the person will die or something else will happen, all those kinds of things. But it's not always. It's not. Those are abnormal situations that is bound to happen. It's everywhere. Okay. So basically understand the market, then make a profit. Now the movement here now is like 50 pips, which is a good movement. If you use one lot size, enter five positions within that price region, you'll be making almost 3,000 to $2,500. And this is just within 10 minutes. And it's making money from forex trading is easy like that. It's possible like that. All right. So now talking about I've talked about double top. The same thing applicable to triple top, triple bottom. All you just have to do is for price to close to take them out. For price to take them out. This is double top now. Ideally, when this price is coming, since this is a break of structure, now this one is doing retracement. So this is the reason for this price doing retracement because it's a break of structure. So after break of structure, it should be retracement. That's how price should be. That's how price should be. Now, when you have double top, triple top, there should be a break of structure. Price should close, should sweep it, or should break it. So all you just have to do is to wait. Like this now, price break this one. Like this, price sweep this one. So if price is breaking, you know okay, price is breaking, I wait for a test, I take my trade. Just like anytime there's break of structure, you are waiting for retracements to take your trades. When it is a sweep, immediately the candle closes, you are taking your trade. Okay, and that's how also to read candle patterns. Now let me go to daily chart. This is daily chart. Now look at here now I can see one structure. I can see this. Why did I pick that one? This should be I'm sorry. So now here now this today is Thursday. This is today, yesterday, Wednesday. This is on Tuesday. Okay. On Monday, price moved. There was a range here. Price break out of this range, and there's a retracement. On Tuesday night, I was talking about this retracement, right? That normally price should retrace. Once price break, before price to continue moving, there should be a retracement. Anytime there's break of structure. Anyways, I didn't mention this break of structure because it's not everything. I'll just continue to mention like that. If you want to learn, go and pay and learn. Some people are just looking for free things, forgetting that most of the things that are free are not helpful. Most of the things that are free are not helpful, and nobody will want to teach you how you can. Want to teach you a skill and will do it for free. No, I've not seen. There's always prices to be paid for everything, no matter how small it may be. It's just that sometimes you may be lucky and you get some things at cheaper price, but it will never happen always. It will never happen always. So immediately this break of structure happens, there should be a retracement, and price did a good retracement of 50%. Okay. And now on Wednesday, price failed. This is the high and this is the low. Both low of the low of Wednesday was higher than the low of Tuesday. So the low of Tuesday was lower than low of Wednesday. High of Tuesday is higher than high of Wednesday. So this is a pure consolidation. At this point in time now, price is creating structure, is creating market structure. So after market structure like this, which is consolidation phase, the next thing is for price to break out. It will break and do retracement. So now looking at this now, since price is moving, is trending high, you can see from here now, this is a break of structure and this is a retracement. This is a break of structure and price is doing the retracement. So this is uptrend. This is uptrend. So since it's uptrend now and this structure now is occurring, it definitely means that price should break out of this structure and continue going up. So you can see now confirmation for anybody that want to place buy on gold. So whatever you want to do on gold currently now is to look for a buy position because it is uptrend. This is daily chart because whatever all is in here now is uptrend and it has created a chart pattern here which gives a bullish continuation pattern. And tomorrow is when we are expecting news, okay, that may change the direction or support the direction. And we know currently US economy is having tariff issues. There's tariff issues in the US economy which will definitely affect the labor force. And when Jerome Powell was talking the last time, he mentioned is that the labor force is having is currently experiencing some challenges. It's experiencing some challenges. So at this point in time now, what we'll be looking for, we can see now that technically gold is uptrend, and what we should be looking for is what is buy position. Is buy position. Is buy position. And you can see the check there now. One, two, and price is trying to break out of it. And you can see now. I see the other time I closed down my trade. I see price. If I left, how do you mean I left that trade now? It will hit me out on break even. And what was the sign? I saw if liquidity sweep, saw equal double top and liquidity sweep, which shows a rejection. So price should, and price now has entered this other block now. And this is an ideal place to take a buy position until otherwise. So for us to take a buy position here now, we have to wait for price to also swing, take the liquidity here and move back. So what happened here? It should happen down here. Then from there we'll take a buy. Is somebody understanding this analysis now? Now this is what I'm doing now, analyzing, combining everything together. What we are learning, what we've learned, combining them together and to take trades. So what we wait for now, we can see right from daily chart, we are on bullish momentum. So what we need to do now is here now we wait for price to reject. Since we have equal low here, price will come and take sweep this, then move high and continue going up. Okay, so that's how it's happened or it's happening. Now I go back to daily chart. I come here. Now, easily if you go through the market charts, you can easily depict when price will range easily. Why? When price is failing to break below previous high or previous low, then price will consolidate. Price will consolidate. Once price is struggling to break above the previous low or break below the previous, I mean, break above previous low or break below previous, I'm feeling sleepy. Break above previous high or break below previous low, then there will be consolidation. It may last for a while or it may not, but definitely we expect a consolidation. You can see consolidation here. If you look at this candle, this both the high and low failed. This one sweep this, right? Now this candle, this is a red candle. Let me change the color so that we can understand better. So to change color, once you can click on F8 or you just right click on the screen, go to properties. What I'm using currently now is MT5. I'm not using TradingView currently. It's MT5. I want to change the colors. Changing the colors. I'm leaving green. I'm changing red. I'm leaving. I need green. I'm changing to red. That's all I need. Okay, with this now we will understand the candle charts better. Sorry, I didn't change the color since I forgot that I'm teaching. Okay, so now see this red candle. After this red candle, price range and this now sweep this previous low of this candle, right? This what we call the sweep. This what we call sweep, or we call it a sell side. This is sell side liquidity, right? So market sweep this previous low of this candle and failed to close below it. See where the price closed. So when price did this, right? And you can see now price created a new high, but it created a new low, but failed to close below this new low. Once price failed like that, the next thing is at this point in time, you are waiting for retracement. There will definitely be a retracement. Now, price retraced on this, and as price retraced on this, you can see it reject and move down. failed to break above the previous high and failed to break below the previous low. And the close of the candle was also both the close and the open is within the previous close and open of the previous candle. At this point in time now, this is a ranging market on lower time frame. So when price is failing like this, when there is failure, you definitely see consolidation in the market. So at that point in time, that's when markets will now create structure. You can see the structure created here. You can see after creating structure, there is a break of structure. Like we said, after break of structure, the next thing is retracement. After break of structure, the next thing is retracement, and you can see when price so after break of structure, price moved and drew retracement of 75% retracement. Let me even add it. Let me add 75 to this. That is levels add. Also, hope you are following the way I'm working on the settings of the Fibonacci. All these things are very, very important. That's why I'm doing them so that you can also understand. Now, I want to add a new level to it, which is since the number is between 0 to uh, 100, I won't put negative. Okay, I'll just put at 75. Okay, what was there is 0.23, so I'll use 0.75. 0.75. Let me use 75.8. So I added the okay, let me put the number I didn't complete. You can see here now it's not writing the number on this. So I need to complete it. Where did I have it? So I'm putting 75.8. Okay. So that's how you go about the settings. You can see now we have a 75.8. You can see when price got there, right? Now pick this and move down. So like you can see now we're saying it anytime there is break of structure, the next thing is for price to do retracement. Price to definitely do retracement after break of structure. So here now this is 75.8. By the time you put and check here now lower time frame, you will see other blocks or gap, or there will be market structure here that is giving this entry also. And when price did that, now if you should do analysis with this within this place now, there is showing a bearish momentum or a downtrend, right? Now, since this and this suggest a downtrend, so this may still be a correction, this may still be a retracement on this movement. So ideally now, where price is now, is it a good place to sell? Yes. So this is a correction here, and within the correction, we see price trending. Within the correction, price is trending, right? So at this point in time now, We'll now wait for price to break out of this structure. Since price is creating structure here, initially looking at this place, let me remove people Nigeria treatment. Now looking at this region alone, I saw uptrend, right? Break of structure, retracement, break of structure, consolidation here, which is a retracement, right? So now, but overall from these two position here, this is a break of structure here, and this should be a retracement of which price is still doing. Actually, this is a retracement that price should sell, but it failed here, suggesting uptrend. So at this point now, what we wait for now is for price to break out of this consolidation. Then if price should break out for buy, then we'll know it's a buy. All we just have to do now is just to monitor the price on lower time frame, M15, M30, H1. Monitor it and see price reaction. Monitor it and see price reaction. You can see price is rejecting from here. And still rejection. So we patiently wait and see what will happen at the end of the day and see how price is rejecting. But we'll still wait for the candle to close to know if it will reject completely. But like I said, it will be much more reliable if there's a sweep. If there's a sweep. So we'll continue to monitor this until price decide to change or give a signal that no, from this point in time I will buy. So you don't just jump into the buy because price is here. No, we'll wait for price to give reaction and we'll take our entries. Okay. So for now, gold is bullish until price is out of this structure for a bearish momentum. Okay, so I've talked about previous high, previous low. The same thing is applicable, be it monthly, be it weekly, be it daily. Everything is that just have to do with the candle. You check the high of the previous candle, the low of the previous candle. On higher time frame, it's much more preferable to check candles one by one. But on lower time frame like M15, M30, H1, you can be doing double top, double bottom, triple bottom. You can be doing that because easily it will be formed within a day. It will be formed, but on monthly it will take years for it to form, and you'll be waiting for years to do analysis. No, you have to be doing analysis every day, taking trades every day. So in such a case, M15, M30, H1 is advisable for you to check for uh, previous highs and previous lows, equal highs, equal lows. So if price is breaking it, then you know, okay, definitely price is trending up. And if price is breaking below, you know, okay, price is trending down. So you can see now, see literally now on monthly charts, you can see price failed last month. Price failed to close below the lower to the low of previous month and high of so price failed. So there's probability that this consolidation also may continue. That price may still fail to close above last week high or close below last month low. And last month ends with indecision. And anytime there's indecision in the markets, price always follow the trend. And the overall trend is bullish. The overall trend is bullish. So you can see now this another confirmation that price gold can continue pushing high, and more reason why you should look for a buy position because overall trend is bullish. Last month ends with indecision, and anytime there's indecision in the market, trend always prevail. trend prevail. You can check. All this analysis I'm doing now is not only applicable to God. It's just because I'm used to it. Let me open another chart. You can see I used to do analysis on other. This is BTC here. This is Euro USD. You can see Euro USD here. So I used to do analysis on other currency pair, but it's just that most of the time I'm always trading gold. I run analysis on all of them because they are all candle formations, they are all pattern formations. All of them, they are all charts following definite rules and regulation. All right. So high of the day, low of the day, low of the month, high of the month. That's how you go about it. And just note that whatsoever is happening on lower time frame, on the candles on the lower time frame, is also happening on the candles of the higher time frame. The only difference is just the time it takes for all these things to happen. It's just the time it takes. So, any question so that I don't just keep on talking? Any question based on what I've said? If you are here, you can hear me. Any question? If you have any question, just put it in the comment section. Yes, and type the question. And if there's no question, type no so that I can move forward. Because next tomorrow class will be purely practical. So we'll be doing chart analysis and be placing trades. So that from there, whatever I need to mention, I'll mention them again. But basically, everything we are doing now is just this analysis. It's just this analysis. Okay, so for today, the last analysis I'll mention is distribution, manipulation, and accumulation. You call it accumulation, distribution, accumulation, manipulation, distribution. Yeah, that's how it should be. Accumulation, manipulation, then distribution. This is another analysis. All I've been talking about since has to do with SMC. Hope we know that. Things that has to do with break of structure, liquidity sweep, retest, they are all SMC concepts. ICT has to do with other blocks, fair value gap, jump, swing high, swing low, what else? That's basically that. So now this analysis I'm talking about now, accumulation, manipulation, and distribution. So, okay, talking about AMD, accumulation, manipulation, distribution, called AMD. So it's institutional trading concept. We call it institutional trading concept. It's very simple and like I said, tomorrow we'll be doing practicals. Tomorrow, next tomorrow we'll do practicals. You open any charts. We open different charts and run analysis on them. Okay. Then I'm trying to remember one principle that is called the McConaughey's principle. Well, it's McConaughey principle. Yeah, cost distribution. No, no, it's finance. Trading. Search. Trading. Okay, so yeah, I've seen what I was looking for. So we call it a week of, sorry, that mechanic of is that's in physics. Yeah, week of trading. It's week of that talks about manipulation, that talks about these three phases of price movement, which has to do with accumulation, manipulation, and distribution. Okay, so I come back. We have the accumulation AMD trading analysis concept is was originated or was done by Wyckoff. Was done by Wyckoff. That's Wyckoff. So was the one that talk about this analysis, which is very simple. Let me go to TradingView. Let me use TradingView to do this explanation. Or should we go to this? try to move this to the back. This network. Let me stop sharing the other one and share this. Okay, let me still leave this one. Let me even use it safe. So when there is a accumulation phase has to do with consolidation, and consolidation is when price is creating equal lows and equal highs. When price is creating equal lows and equal highs, we call it consolidation, or we call it accumulation. When price is creating equal lows and equal highs, then you call it accumulation. Actually, the accumulation phase is always like this. Here can be wicks, can be body close candle, but it's always in this pattern. It's always the accumulation phase like this. Then price will firstly break out of the of the accumulation. Let me okay. So this now is accumulation. At this point now, I'll call it accumulation. Let me put it there. Accumulation. At this point now, price is moving within, creating equal highs and equal lows. It's always like this. I've traded this before. Let me check. Okay, it will not be on this system, it will be on the other system. Maybe if I'm on TikTok, I will bring it up and show it. Or anytime on the system, I can transfer it to see. I do screenshots most of my trades or my analysis as if I remember. Okay, so price will firstly move out of this range in one direction. Any movement out of the range, the first movement out of the range is always the manipulation. The first movement out of the range is always the manipulation. So after this, where did I say it? Okay, it's here. So the first movement out of this accumulation is called manipulation. Then after the manipulation, then the distribution, which is the trend. The distribution, which is trend. So this movement out of the accumulation phase is called manipulation. Let me write it on top. Manipulation. That is, it's trying to deceive someone that okay, I want to move this way. Of which, if you look at SMC will tell you it's liquidity sweep. Do you understand that? So SMC will call it liquidity sweep, while Wyckoff is calling it manipulation. Text manipulation, manipulation. So this is manipulation, then distribution. Distribution. So this is the distribution. And put it this way. So I can actually read and put it this way. So we have the accumulation phase, the manipulation phase, then the distribution. Okay. So once this is happening, definitely you'll be able to see it in the market. It will happen just like this. It will give a clear direction. It will make it clear that this is what I'm doing. That's what price will do. Price will make it very, very clear that this is what I do, this is what I am, this is what I'm doing. It will make it very, very clear and clearing. Okay. All we just have to do is to look into it and work with it and try to see if I can still see that analysis. If I see it, I can still remember very well. I can remember the trade very well if I see it. Yeah, I think this is it. Yeah, this is it. This is it. I know if I see the screenshots, I will still bring it up. This is where I saw. You can see here now that price is purely consolidating. This is a real market scenario. Price is consolidating and it's moved out. When price moved out to respect this, you see this. If you check here on lower time frame, this is H4. If you check on lower time frame, you may still see other block here. The price is actually respecting here. So let's see what price is expecting here. Okay, break up structure. You can see now that at this point in time now, if it is trend line, if it's a trend line trade using horizontal line trade, you can see that's what price did here. This they reach break out of it and price came to retest it. So that was price what price did and enter this consolidation. Price moved out of the consolidation, respected this and boom. So this is a pure accumulation, I mean pure accumulation, manipulation and distribution. It's as simple as this. The chart pattern will be clear to show it's clear that this is what I'm doing. To show it's clear this is what I'm doing. I did the analysis. I'm sure once if I check my charts, I will still be able to see all those pictures that I did. So that's why anytime anybody is asking me what is my method of trading, I always follow the charts. Why I'm doing this is because I only trade good. So I should be able to come to the market every day to pick analysis and take trades. It's not like people using only SMC, but they check other currency pairs. You can see now because gold may not do SMC today and it will be GBP JPY that will do it. Tomorrow it may be USD JPY. Next tomorrow may be Euro AUD. So they have to be checking all those currency pairs. And everything has to do with understanding your personality. The path I'm taking in forex trading is the path that I know that this is what I can do. I've practiced it and I've realized, okay, this is the only thing that I know it can work for me. And if you've checked through, I'm the one doing this. My trading pattern is only particular, is only um, English as the same. It's only particular to me. I'm the only one trading the way I'm trading. Others are trading the way they are trading. It's a path that I patiently figured out and I master. So trading demands you understanding yourself and know what can work for you. So that's basically trading. So you can go online and check for all these things for better or for more clarity, right? So it can be in bearish form or it can be in bearish form or bullish form. Okay, so I'll be stopping there for today. I'll be stopping here for today. Any question? So far, so good. I know I've been able to explain and talk about forex trading generally and the basic way of going about it. Whatsoever you can compare what I've explained to any class. You can go ahead and do the comparison and check how far it is. So I'll be stopping here for today. Tomorrow we'll continue. Like I said, you have to practice. Learning, talking, it's one thing, and another thing is for you to practice. Without you practicing, you will not go too far in forex trading. Making money in forex trading, okay, I will talk about that one. That will be the last day. I'll talk about, okay, tomorrow, talk about making money. So let us go ahead, practice, and see what we've done. Okay, so we'll meet tomorrow. I'll make sure to start by 12:30 to avoid uh, any irrelevancies. This is 2 hours. Okay, the other one I have to start already. This one have 54 minutes. Okay, so take care. Mr. Amos, are you still there? Can you hear me? Or you've slept off? I don't know that's come for this class. Others just came and disappeared. Cheaper, cheaper, cheaper. On H4, I can see this here, which is still a barrier for price too. be bullish.